It is the Big Biz Show. We are centered here in Southern California. Appreciate you being along for the ride. Day Trader Trio right there, live and in person. Listen to them jam those tunes. They're up in your biz. Hello. Street cred coming out of my ears. Costumer, Godwin, and Sully.
Nice to see you today. James McCormick, the CEO of Cloudastructure Inc. And of course, I call it the Smitherman McCormick Show, or the McCormick Smitherman Show. Smitherman. Guys, great to have you back on the air today. I've got lots to talk to you about.
Glad.
And Greg, we apologize in advance for all this because I know he likes to be at his desk, nice and quiet, getting the numbers done, cutting the deals, and James pulls them in, and it's like the mob.
We're a tech company. You gotta think on your feet. You gotta react to the moment. Always happy to be here.
I agree. Here's my question for you guys. I'm going to start backwards. You guys have an earnings call in 2 weeks. Mm-hmm. And obviously we can't talk specifics about that because you're a publicly traded company. However, how do you get prepared for that other than just do the audit? Whether it's good news or bad news, I always want to ask a CEO and CFO. Let's say it's really great news. That's probably an easier earnings call because these earnings calls these days are participative. Mm-hmm. Now, and if it's bad news, there's got to be some sort of preparation.
Technical difficulties.
Either way, it's not just acceptable now just to say, "Here's the deal. Thanks for calling. We'll see you next year." Because look, you're basically the CEO and CFO work at the pleasure of the board of directors, who work at the pleasure of the shareholders. Correct? Yeah. So either one of you, I'll let you handle that one.
Greg, do you want to start, and then I'll chip in?
You're right. If it's fantastic news, it does make the call a little bit easier, but just a little bit easier, right? Our job is to report the facts, right? And although our first job is really to run the company well, which we think we are doing, naturally. But if the facts, if you have a bad quarter, let's say, and the news isn't as great, then the question is not so much what went wrong, but how are you going to fix it? How are you going to make it better going forward? Mm-hmm. And that's something that I feel very comfortable talking about. We've got a great plan for the company, regardless of, quarter to quarter fluctuations. We know how this business is driving forward. We've got a vision. We've got a plan that we think long term is going to be very successful for our customers, for our shareholders, for everyone involved. And so in those bad instances, it's how do you communicate that vision to your shareholders and give them.
So here's my question. In your opinion, now look at, frankly, I know your company intimately, and so does our audience. So it's a fantastic company. It's a great management team. It's a good business model. You're growing. Everything. All figures point to the right direction here. Mm-hmm. But you're not Apple. You're not Microsoft. And when Microsoft and Apple do an earnings call, things shift sometimes in big ways. How much do you think investors and institutionals and retail pay attention to earnings calls and such like that for companies of your size? Because I know it's important regulatory. You've got to do it as a regulatory issue. But do you think it really moves the needle one way or the other? Have you seen that before?
My humble opinion, no. Yeah. No, it doesn't move the needle. But then the question is why, right? And this is something, frankly, that we work on, think about, struggle at times to try to figure out on a daily basis is, we've talked about this before. You go back and look at the press releases that we issued in 2025 and so far in 2026. There's no fluff. It's just, here's how we're executing the business. It's all good news.
Yeah, just the facts, man.
Right, just the facts. So if you look at that vis-a-vis what our stock price is and our current market capitalization, they don't equate. They just don't equate. It's frustrating as can be. Why? We believe one of the big problems is the individual investors, institutional investors, they get so much data thrown at them on a daily basis. We need to figure out other clever ways to try to cut through the clutter.
Sure.
to get our news and get our messaging out, right? So look, this conference call or earnings call, in a couple weeks, it's going to be good news, right? We already pre-announced, right, what the unaudited revenue numbers were for 2025. That's good. 270% revenue growth year over year, et cetera. So, we'll focus on the highlights along with just, the dry, hard facts of, the economics of the business. Do we think that it will move the needle significantly? We hope it will, but my guess is probably not that much.
Yeah, I think it's interesting too, because I think earnings are important. Along with the news as well. I mean, it's a three-legged stool. You got to look at the technical analysis. You got to look at the management. You got to look at the news. You guys had a big win week after you left here last time, and once again, we'll take perfect responsibility. In fact, every time that you're in the studio, you got a great press release. You're welcome. You guys got a 13-building multifamily unit, and it was driven by a county regulatory decision. That's a big deal. I mean, talk about that because that's when they start saying mandate, that's good news for guys like you.
Yeah, absolutely. So that was in New England, Prince George's County, Maryland, or PG County as we call it. It's the fourth deployment that we have in PG County, and this particular one, the customer, went away from, hey, let's do one property and then figure out if it makes sense to do the next one. They said, the heck with it. We want you to do all 13 buildings in this multifamily community. And, it's very interesting. Different states, different counties are like Florida, for instance, or parts of Florida are starting to regulate or make it mandatory for multifamily properties to protect their residents further, meaning you have to have proactive security solutions, which is obviously what we provide. And we're seeing more and more of this as, there are continued appeals, I guess you would say, for individual security, particularly in housing complexes. And we are right at the intersection of being able to provide cost-effective solutions that meet these mandates and protect the residents and protect the property owners.
James McCormick, Greg Smitherman, Cloudastructure Incorporated, ticker symbol CSAI, with us here in the Big Show. James, what drove that current regulatory decision in your mind?
Yeah, what made the county move the
Yeah. Well, as we understand it, it was just the crime levels that were being experienced in that particular county just got to a point where the local legislature just couldn't. They knew they had to do something.
Yeah,
right. You can't say, "Hey, would you guys please consider," right, putting in additional security measures? No, they just went right to mandate, and it's worked. Remember, one of the stats we use is 85% of multifamily property management groups report that crime is on the rise. 85%. I think PG County, that percentage was even higher.
Greg Smitherman, James McCormick, Cloudastructure Incorporated, CSAI, the ticker symbol. You are safer with them.